And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell. Here to help take us beyond the bell, it's a global simulcast. Scarlet Fu in the TV studio, Carol Massar in the radio booth, Bailey Lipschultz in for Tim Stenovic on this Monday afternoon. Welcome to our audiences across all of our Bloomberg platforms. Carol Massar, a somewhat tepid day on the surface, but some big individual movers out there, and of course a big week ahead with some big earnings and a big inflation report on tap.
Sounds like you're hinting about GameStop, which is definitely one of my gainers in today's session. We'll talk about that later. I do feel like I said to Bailey, it's a meh day in my mood. I feel like I kind of want to rip the Band-Aid off and let's just get to the CPI report on Wednesday.
That's what I've been saying.
Go girl.
We've seen JP Morgan came out the trading desk saying they expect a 1% move on Wednesday, so it feels like all the fireworks will be later in this week, starting with tomorrow, PPI data, which Mike McKee calls the undercard, so it's going to be a busy week, Carol.
Yeah.
You know, I mean, so it goes to follow that, of course, everyone's going to get all worked up about these meme stocks, whether it's GameStop, whether it's AMC. There's really nothing else going on as investors wait for the big CPI report on Wednesday.
Yep, that's why positioning is going to be really interesting, I think, as we head into that, right? Like, have we shaken out enough? Are we neutral enough? We can actually see some movement.
And we should point out, too, I mean, we talk about the big movers here and sort of what really is driving the market. I mean, I was looking at the number one mover in the S&P, and this dovetails with the conversation Alex and I were having with Sherry Paul over at Morgan Stanley. The idea that there is a strong bid into stocks that have dividends, have buybacks, and basically some form of income or cash return. And you saw that with Insight up 9% here on the day, and that's largely because of that big share purchase authorization, $2 billion there. So that remains part of the single stock story as a lot of folks wait to see whether there is a broader market story with the macro data in the middle of the week. On the day, the Dow Jones Industrial Average is going to finish slightly lower here, down about 0.2%, or roughly about 80 points lower. The S&P 500 lower by just a point or two, so basically call it unchanged as we wait for these numbers to settle. The Nasdaq the Nasdaq Composite higher by about 47 points, or 0.3%, and the Russell also clinging to gains on the day, higher by 2 points, or 0.1%.
All right, as you said, kind of meh, but if you get into some of the individual names, you're right. It's kind of interesting. GameStop is certainly one of, I feel like, what is the pandemic back? You got GameStop up at its highs, folks, up almost 119%, finishing the day with a gain of more than 70%, 74%. Speculation swirling around a return to social media by Keith Gill, who drove the meme stock mania, of 2021 under the moniker Roaring Kitty. I just like saying Roaring Kitty. Who doesn't? Really tough, though, on short sellers who probably have had to do a ton of covering. More than $1 billion loss after the company's share price roughly tripled this month, so a lot of short covering on that one. Let's get to Moderna, folks. Up about 7.5% in today's session. It's the number 2 gainer in the S&P 500, number 1 gainer in the Nasdaq 100. Gotta say, no market-moving news that I could see, and it's up about 25% year to date. And then real quickly, Walgreens Boots, also one of the outperformers, up about 5.6%, off its high of about 8.5% in today's session, but finishing, again, a gain of about 5.6%. Said to be reaching out to potential buyers of its nearly $9 billion Boots drugstore chain in the UK, according to folks familiar. You might remember the company last year revived discussions on a potential exit from the chain almost 18 months after scrapping a planned sale. That was some news that Bloomberg did back in December. Again, the number 3 gainer in the S&P, Scarlet, and the number 2 gainer in the Nasdaq 100.
You know, it was interesting because earlier on I was checking, and the gainers and the decliners in terms of industry groups was pretty much evenly split. But by the close, we have a lot more decliners. None of these are moving by a lot in terms of sector performances. So let's just take a look at the laggards here. You've got industrials, financials, and consumer staples. They're each down by at least 2/3, or I should say, a quarter of 1%. The worst performers are industrials, losing a whopping half of 1%. On the flip side, tech and real estate investment trusts doing better. They're the only sectors to finish in the green.
Yeah, just before we go to the decliners, too, I was looking at some of the gainers, and one interesting story I thought was that pop that you saw in Squarespace, which was basically on the back of a take-private deal. And it's kind of interesting, too. We talk so much about the IPO market opening up, at least Lynn Martin at NYSE believes that. But you've had so many companies now that have gone the opposite direction here, and you kind of wonder whether that maybe starts, Bailey, another trend.
Yeah, Romaine, we've seen the number of publicly traded U.S. companies be cut in half from the late 90s. So one thing to definitely keep an eye on as we see M&A play out. Talking about decliners, though, we want to start with Duolingo, down closing at the lowest level since February.
Did you say Dua Lipa?
Duolingo.
No, okay. Just checking.
Big fan of Dua Lipa. I don't have Duolingo, though. I don't know if you guys do. There's a lot of uncertainty around generative AI, whether OpenAI's technologies can impact people wanting to learn new languages and whether they'll pay to learn learn new languages. So that's why we're seeing shares of that company under pressure. Another company in an area that's near and dear to my heart, biotech, Cytokinetics dropping at 1.10%, closing at the lowest level since December, coming after drug developer data on their heart drug, missing expectations. Truist saying the sell-off was overdone, pared back the losses to 6.8%, but nonetheless a slope down into the right for what's now a $6 billion biotech. And to cap it off, I want to call out Bank of California, shout out to my state, my home state, missing expectations in 1Q, EPS restated lower than expected. One thing to keep an eye on as we've been kind of charting what's going on with some of these regional and smaller banks, does seem like Bank of California, with some of their accounting, restating that 1Q EPS lower than Wall Street was looking for.
And if we're going to yields, guys, it's boring. Let's just move on. I mean, there's nothing happening. I feel like we're just coasting by here. We're going to wait and see what happens with CPI. If you have positioning basically sussed out enough that maybe you see some movement in the front end if you wind up seeing an overheated inflation data, but maybe the real action is going to be just a range bound in the back half. That's what Subhadra Rajappa, SocGen, was talking to us about. But that's a snoozer, so we can move on, Romaine.
Yeah, I mean, that's certainly going to be a big catalyst here. We did see volume pick up in that space, but it raises the question here as to what people are actually positioning around. Are they scared that inflation has sort of reared its head? Are they still focused on corporate fundamentals, which are, I guess, decent depending on where you look? Or is it going to be something else that drives it, like geopolitics?
Yeah, or, meme stocks being back in favor.
Are they back in favor? I haven't heard.
It's just it's one day, trade. But GameStop, as I mentioned earlier, up 74%. I'm looking at AMC, they're up about 78%. So, I don't know what to say on these. Is it just kind of a game, a play? I don't know, but it certainly catches everybody's attention, Scarlett.
It's a nice distraction while we wait for PPI and CPI. And of course,
the real stuff?
The real stuff, yeah. What's interesting, of course, this time is you've already had 3 months where inflation came in hotter than anticipated. So the question is whether we're going to get that again. And if inflation does moderate, as the optimists are hoping, what's going to provide a greater upside, bonds or stocks? And that's an open question here.
Yeah, it's an open question, too. It's interesting, though, too, about this whole memes, everything that we saw today with AMC and GameStop as well. I mean, it seems to get to this idea, though, that there is a little bit more risk appetite than maybe what we've seen over the last year. Because I feel like we've had a few iterations here where you've seen something, maybe not as quite the big monster X post that Roaring Kitty made, but you didn't get the same reaction in the shares on some of those days. And I sort of wonder what's different about today, Bailey.
Romaine, it feels like people want to generate alpha. When I talk to pro money managers, not only the retail crowd that's late to these games, late to some of these moves, it's an easy way to game the system. You can flip some call options, you can buy some stock and assume that Roaring Kitty, like he did posting multiple times on X, can continue to drive someone else to buy the stock, again, in a day where we ended up basically unchanged.
And this is why the top story of the day was thumb wars that happened in Bavaria. Did you guys...
Finger wrestling!
I mean, you can talk about S&P earnings estimates, but come on, this was thumb wrestling. This was a whole thing. The AP reported it. It was amazing pictures. These guys have warm-ups for their thumbs. There's a whole contraption that you do. This was big deal.
I love this story that it actually explains what it is. In each round, 2 competitors sit on opposite sides of a solid table and each hooks one finger, usually the middle finger. It's just like we all played it as kids, right, Scarlett?
Absolutely. I wanted a video to go along with this story.
This is a German championship in finger Hockland or finger wrestling that happened in Baden-Baden. I'm just saying. That's why that's that top story, because it's hard to make hay out of a day like today.
I'm curious, why is it the middle finger? Is that the stronger finger?
I don't know.
I mean, I've used my middle finger a lot, but I didn't know it had any real strength.
This is how they've done it for years.
Yeah.
Apparently, they would settle disputes back in the olden days using finger wrestling, and this is how it was done. This is why it's like a tension between bond and equity investment.
If you injure the middle finger, it's not the end of the world. If you injure your thumb, that's a problem, right?
Oh, that's an excellent point.
I don't know, just a theory.
It depends. What do you use your middle finger for?
I'm not touching that one.
I feel like I'm in the movies of the olden times, so they were arm wrestling, right? So
don't shake
arm
your
wrestling
head.
is the thing.
This is how they actually got.
Is that Lederhosen that they're?
Yes. Yes, this is why it's amazing. Thank you for reading this article, Carol.
I loved it. I am so with you. All right, everybody.
I don't know what's more alarming, that we're talking about this or that Carol actually held up a printed copy of the story.
I like paper.
Yeah.
I know, it's not.
No, what's more upsetting is that everyone was like, we're not doing the story. And then I'm like, I'm doing the story.
And the face of agony on them. I mean, oh my God. All right. That's a wrap. That's our Monday wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you again, same time, same place tomorrow.